Welcome everybody. Welcome to today's daily video log for 17th February 2017 and potential auction paths. You myself Dean, you can get in touch with me on Twitter or you can visit my website getthattradingedge.in. Software used for today's presentation are Bell Market Profile and Bell Order Flow. For more details of the softwares, you can visit belltpo.com. Let me go through the disclaimer. The information shared here is not a trading recommendation and we are not a business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. You will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. So let's go to charts. This is the development today on Nifty. uh, Before we go into it, let's just observe the fact that we have a completely higher uh, value area placement, and what we were suspecting for yesterday's action to be absorption, that is precisely what this whole thing turned out to be, because then we have a nice higher open. It was completely higher, it was completely outside the range. But what was interesting was the response we got to this higher open. We immediately uh, rejected this higher prices, entered back into this 6, 7, 8 days bracket, and tried to test or enter yesterday's range. But the problem was we could not enter yesterday's range in this B period. Then we had this minor balance forming here. This was roughly a B shape. So we started moving higher to correct this inventory imbalance. But one thing happened, and that was if this was a B shape, it was expected that we should tag the open, but we could not reach there. We could not reach even near the open. And when this was happening, I put out a post suggesting, when the price was in this region, this was this breakout level, the level of the clustered highs, and I said that if we can fail here, then it would be a nice rejection of the higher prices by bears, and we might explore lower to check for buyers. But what happened was we went quite a bit above that. At this time I was expecting that we might test the open, but we did not do that. And then this was a nice opportunity to take an intraday short, and the prices came down. Now if the bears had to take control, they had to trade below this particular small distribution which was happening in the morning. But as you can see, in I period they came down, tested, and again went back up, and by the close they were again coming down, but still well above this small balance which form in the morning. So if the bears have to take control, they need to start trading in this region, exit below this, and enter this absorption region, and then start going down. This absorption region might also try to defend the prices. If we come down here and reject immediately, then we can be sure that these players who reaccumulated in this zone are defending. These bulls are defending, and we might again try to go higher and see what lies at this particular thick part of the profile. And if we can manage to trade above that, then we'll see higher prices. Else uh, we might see some rejection here, and I'll get to the reason why we'll see some rejection here. This is one of the you know possible scenarios. Second thing, let me clear all this. is if you look at this whole profile, you will see that it's a nice balance. May not be a very smooth balance. We have some anomalies here, we have an anomaly here. It's not very smooth, but still a balance. And we know what this kind of a balance suggests after a nice gap up, where bulls were reaccumulating in this zone, managed a higher opening, but then bears came in and they uh, they could not let bulls succeed in their attempt to mark the prices up. But what happened was, in this particular fight between bears and bulls, we got a higher value. Now, a completely higher value prices not able to even enter yesterday's range is a pretty bullish scenario. Also, we have the volume has increased, so that means that there was some interest by smart money at higher prices. Now, whether they were using the higher prices to sell, or whether they were using the higher prices, or they were they are expecting even higher prices and they are accumulating in this range, that remains to be seen. But intraday we had two b-shaped profiles. So before going to that, let me again tell you that this profile looks like the bears and the bulls are in balance, coming into balance after reaching uh, a high in this strong uptrend. Means that this uptrend is a bit stretched, and now the bears can match the bulls, but we need some follow through for that. But if we split the profile, we have two three parts of the profile. Oh, sorry, let me just split it. Yes, and again let me split here. Yes, so these are the two b shapes I was talking about. This was the morning one, and this was the this happened late in the day. So these were two v-shaped profiles. What it suggested was there were two attempts to mark the prices down. On each attempt, bulls were stepping in and supporting the market. So that suggests that bulls are accumulating at these higher prices, and the higher volume we can, looking at this particular structure, attribute to the smart buyers, the smart money which is buying at these levels. So even though the day structure does not look very convincing for the bulls, but I feel that this might be a nice example of what Jim Dalton calls cognitive dissonance, where the price attempts to mark down during the day after a nice higher open, and also in our fair in the favor of the bulls is that we could not even enter yesterday's range. So but still we have also a rejection at the top, and a test of the rejection also happening. So unless and until we start trading in this zone above this pullback high and this open, once we start trading in this zone, then whatever selling that has happened here can be put under pressure and we might see higher prices. But unless and until that happens, we cannot be very sure that whether we have this uptrend continuing even further or not. So an open here and acceptance will tell us that bulls are in control, and one more thing can happen is we just continue this balance, this whole balance. Tomorrow we open somewhere inside value and just continue this balance, repair these anomalies, and just form even nicer tighter bell curve tomorrow. And then maybe tomorrow as in on Monday, and then maybe from Tuesday give some direction to the market, since it's also an expiry week. So we might expect some fireworks, and smart money trying to trap one side of the market and giving us a nice directional move. So if this rejection holds by the bears, then we are sure to test this lower end of the bracket. But if we either start accepting in this region, the region from where we had this rejection, then we might see higher prices immediately. Or if we just extend this balancing action on Monday, then Tuesday we can look for any signs of either bulls trying to take control or bears trying to take control. So that is what I expect for Nifty. Now I was requested to incorporate Bank Nifty in our daily analysis. So let's try and have a look at Bank Nifty. Bank Nifty, we have a nice clean breakout above this particular zone. So we have, we have traded well above this high. And the only problem with Bank Nifty is that we have a nice tail at the top. After opening higher, wait a minute, yeah. After opening higher, we tried to test higher prices, found nothing. There was a sharp rejection. We entered this particular bracket, but we could not come anywhere close to yesterday's range. There was this another attempt to mark prices up to test whether this selling is really strong or not, and it turned out that it was strong selling, because then the second rejection we also got there. But the only problem is that this rejection should have taken out this low, which did not happen. And if you look at the shape of this rejection, it looks like a B. So again, I mean, a bit confusing. Higher value, strong rejection, test of the rejection happening, but not generating the follow through expected of taking out the low of the day, or even entering yesterday's range, or this nice balance which is there. So again, I would say that this auction might not be complete, uh, given the expiry. If you also look at this particular profile, you'll see some anomalies here, here, here. Again this value is there. Here also there is an anomaly. So I mean, the structure is a bit jagged, and we need to smoothen it out. So again, the same drill: find acceptance in this area of rejection, then decide, put the bears here under pressure and move higher. uh, Continue the balance in this region, try to repair these anomalies. But if we start finding acceptance inside this bracket, then first of all we have a likely test of this point of control. Prices might, after accepting, put bulls under pressure and test their commitment at this level, and either the bulls might defend this, or then we can completely traverse this whole composite. So that's how Bank Nifty might behave. But this rejection was slightly better than Nifty. This rejection here, which happened, was slightly better than Nifty. The only issue is that we could not take out this morning low both in Nifty as well as Bank Nifty, and that is what is keeping me from becoming completely bearish. This kind of activity happens where you get a nice gap up open, uh, and prices find rejection at the top, form a nice balance. What might happen is that we might continue balance tomorrow, form a nice balance, and then leave that balance and come down. So somebody was asking about island profiles. So if this kind of development happens tomorrow, we trade here, form a nice balance, and maybe on Tuesday we leave this complete balance and move down, then this might become an example of an island profile. So that is my view on Bank Nifty. Not much to be shared on order flow front. On Nifty, I think there was, this is the Nifty order flow chart. There was this test which happened the second time when it came higher. On the 15-minute chart, there is not a delta divergence happening, but on a lower time frame chart, definitely there was. On 15-minute chart, what I was finding interesting was this action. twice you had green prints, but the close was, off the highs. And when you shift to a lower time frame chart, let me take you to a lower time frame chart, you can clearly see a nice delta divergence happening. This is the 3-minute order flow chart. And where is that rejection? Not here. Yes, here. So here you can observe a nice delta divergence. You can see on this and this bar, both were up bars, and you had delta falling. Then this was kind of a test, no demand kind of a bar, and this is what prompted me to take a short trade. So that is my analysis for Nifty, the order flow aspect of it. Now there was a question. Let me go to that. Question was posted by RP. The question reads that we breached the balance with a gap, then formed a B in early half, suggesting old business. Then auction in the stem of the B and profile shape resulted in a balance. At the end of the day, can we consider that auction successfully breached the balance and attracted new business? Now that is precisely what I was trying to mention. Nice to see observation beforehand, which matches what I was thinking. So not exactly new business. New business would have, taken prices, may have resulted in a nice trend day. Actually, what happened when we, gapped up above this important reference, some people shorted the market, and that resulted in this range entry. This range entry prompted the second sell, which I also took, but it was a scalp. Now, twice rejecting above this particular level might give bears some confidence, but we all know that we need to find what the structure is telling us, and the structure tells us that every time the bears tried to mark the prices down, we had a B-shaped profile. So it means that, strong smart money was accumulating from these bears. So it was not a good idea to, carry the short overnight. So I covered it. Also intraday I posted on Slack that we need to take out the day's low if the bears have to be in control, and that did not happen. We could not even take out this loop of the first B. So all this points towards that the buyers may be stepping in silently at the lows of these marked down attempts by bears. So this might not, I mean, we can never predict the market, but might not result in this kind of action. We might, balance some more, repair the anomalies of this profile, wear everybody out, test everybody's patience, and once everybody, gives up, then try to, you know trap people on one side of the market and move the market directionally. Given that the expiry week is there, there might be some nice opportunities for short-term trades, uh, which will give, a nice risk reward. So I think that is all from my side for today. We'll meet on Monday. Have a nice weekend. Thanks for watching.